Hey, what's up? I'm Russ, and before we get into the video, I would like to take a brief minute for you to think about considering donating to a charity to help those in need, especially those people that are displaced from their homes, that are fleeing the damage and destruction in Ukraine. At the time of this recording, Russia is still invading Ukraine. The conflict is still raging on, and unfortunately, there is a lot of human tragedy that is involved in this whole mess. So while those of us have the financial means and the financial wherewithal, whatever it is that you can afford, I would strongly consider going to PayPal. Makes it super easy to donate. And if you are in the future and this whole thing, I hope, has been resolved, still consider donating, because there are always people in need that truly do need our help. From the latest Berkshire shareholders letter, Warren Buffett wrote, quote, "Whatever our form of ownership, our goal is to have meaningful investments in businesses with both durable economic advantages and a first-class CEO. Please note particularly that we own stocks based upon our expectations about their long-term business performance and not because we view them as vehicles for timely market moves. That point is crucial. Charlie and I are not stock pickers, we are business pickers." I absolutely love what Warren said here, and he's just reminding us that we should be buying businesses, investing for the long term. So we're going to talk about some stocks that are up first and then some that are down. And keep in mind, we should always remember that before we buy a dividend, we are buying a business, because if you buy a crappy business, they're not going to be able to sustain that dividend, and we're not dividend growth investing at that point. Russia and Ukraine account for less than 2% of worldwide gross domestic product. Russia is the world's third largest oil producer and second largest exporter of crude. Russia accounts for about 10% of the world's oil, and they also export about half of the European Union's natural gas. Interestingly, about 1% of the S&P 500 companies' sales come from Russia and Ukraine. So with all that being said, let's take a look at some sectors and stocks that are mostly up during this Russia and Ukraine conflict. Defense stocks are all way up. Many European Union nations are responding with proposed defense spending, which is pushing companies higher. Some of the countries that are supporting the Ukraine resistance are Germany, sending 1,000 anti-tank weapons and 500 Stinger anti-aircraft defense systems. Sweden is sending anti-tank weapons, helmets, and body armor. Finland is donating anti-tank weapons and assault rifles. And Switzerland is getting in on the action by freezing Russian financial assets. These following defense companies have just been knocking it out of the park. Now remember, a lot of this is proposed spending. It still has to make its way through governments and it has to be finalized. So that's all going to be seen later in the future, but the demand is there and a lot of people are buying because of the demand. So let's take a look at some of the defense companies that have gone up, and we'll look at their 1 month gains from the recording of this video and their dividend yield. The world's largest military defense contractor, Lockheed Martin, is up 17.7% with a 2.40% dividend yield. And they make many things, but in particular here, the Javelin anti-tank missiles. Northrop Grumman, ticker NOC, is up 26% with a 1.31% dividend yield. They are a Lockheed Martin F-35 subcontractor. They also make Global Hawk drones and the B-21 stealth bomber. Raytheon, ticker RTX, is up 3.28% with a 2.08% dividend yield. Germany, remember, is sending 500 Stinger missiles, which are made by Raytheon. And then Javelin anti-tank missiles, those are jointly made with Lockheed Martin, as well as Patriot air defense missiles. General Dynamics, ticker GD, is up 15 13.31%, 2.04% dividend yield. They make the M1 Abrams tank and various submarines for the United States Navy. BAE Systems, ticker BAESY, they are up 19.76%. They have a 2.87% dividend yield, and they are the United Kingdom's largest defense contractor. They build ships, subs, and fighter aircraft. So it's no surprise that many defense companies are up. We're just in a new era, and we're seeing all these countries that are, especially in Europe, that are nervous now, and they want to spend that money to bolster their military defenses, and rightfully so. They should be able to protect themselves, and like Metallica saying, to secure peace is to prepare for war. Many people think that Russia is going to retaliate with cyber attacks, and I would have to agree. So cybersecurity is another area we want to look at. Not a lot of dividend companies that have pure play exposure to cybersecurity, but there's a few that have a good chunk of their revenue coming from cybersecurity. But check out Microsoft. In August of 2021, they announced their commitment to spend $20 billion on cybersecurity over the next 5 years. These next two companies derive about 10% of their revenue from security and related products and services. Accenture, ticker ACN, is actually down 11.61%. They have a 1.27% dividend yield. And Cisco Systems, ticker CSCO, is up 0.45% the past month and has a 2.73% yield. And of course, energy is surging. We're seeing gas prices that haven't been this high in about 14 years. And as the world looks to completely cut off Russia and their exports and try and cripple their economy. So it's no surprise that a lot of the energy companies are going to be taxed for producing more oil that we need to run the economy. And I think this is a short-term thing, but in the long term, this is probably also going to lead to a lot of renewables. We have Enterprise Products Partners, ticker EPD. They're up 5.23%. They have a 7.33% dividend yield. They're a large servicer of both producers and consumers of natural gas, crude oil, refined products, and petrochemicals. Energy Transfer, ticker ET, is also a limited partner. 3.71%. They are up over the last month and have a 6.77% dividend yield. Now, Energy Transfer is a midstream company that moves about 30% of the USA's natural gas and crude oil through over 90,000 miles of their pipelines. Shell, ticker SHEL, used to be Royal Dutch Shell. They're down 5.65%, and their dividend yield is 3.47%. They are the world's largest liquefied natural gas supplier with a 17% market share. Cheniere Energy, ticker LNG, is up 21.11%, a very tiny yield of 0.95% that they just started paying, and they accounted for 10% of the world's liquefied natural gas in 2021. Total Energy's ticker TTE is down 17.5%. They have a 6.01% dividend yield. They are a French company that is one of the 7 super major oil companies. And ExxonMobil, they're not just oil, they're up 8.55% over the last month, 4.4% dividend yield, and 10% of Exxon's cash flow is from liquefied natural gas. So green energy is what everybody wants, but we need a lot of energy to power the modern economy. And I think the green energy of the future is already here. And I lived on top of this green energy during my time in the US Navy. I lived on top of nuclear reactors, so I think nuclear power is the future, and particularly uranium is what the world is going to be craving as we soon realize this. So I'm looking at ticker URNM, which is the North Shore Global Uranium Mining ETF. That is up 13.93% over the last month, has a 6.43% dividend yield, but it does have a 0.85% expense ratio you need to be aware of, so that would give you more of a real yield of about 5.84%. But URNM is up 179% since its December of 2019 inception. And what's beautiful about this is instant exposure because it tracks the performance of 35 companies involved in mining, exploration, development, and production of uranium, as well as companies that hold physical uranium. So those were mostly ones that I think could benefit, but in the short term, remember this too will pass. There are some companies that could be hurt, dinged just a little bit by the conflict between Russia and Ukraine as the world seeks to cut off Russia from everything. Citigroup, ticker C, is down 17.24%, has a 3.67% yield, and has $10 billion of exposure to Russia. Philip Morris, ticker PM, is down 10.26%, has a 5.36% dividend yield. Philip Morris generates 8% of their total sales from Russia and Ukraine, which is the most of all the S&P 500 companies. My beloved PepsiCo is down 5.56% the past month, has a 2.65% yield, and they generate about 4.4% of their total revenue from Russia and Ukraine. McDonald's, ticker MCD, is down 13.75%. That yield is now 2.46%. Russia and Ukraine account for about 4.2% of their revenue. They have 600 restaurants in Russia, and McDonald's, if you didn't know, I love this stat, they feed about 1% of the world's population each and every day. And PVH Corporation, who? That's right. They own Calvin Klein and Tommy Hilfiger. They're down 32% over the last month, 0.22%, little tiny dividend, but 70% of their revenue comes from outside of North America, with 3.6% of their sales coming from Russia and Ukraine. So I had to end it on a weird one. PVH, yeah, who? I did not know that PVH owned Tommy Hilfiger and Calvin Klein. So really cool that things you find doing research that I love sharing with each and every one of you. You know, I'm really got my fingers crossed. I'm hoping for a quick end to this conflict, and it's just so sad to see the bloodshed, the innocent lives taken, and the peoples that have been disrupted from their homes. So again, if you can, whatever you can give, they need your help right now. And it's just generally a good idea to get in the habit of sharing some of your wealth with the world and people who truly do need it. In this little box next to my head, check out a video I just did with the one, the only Ryan Williams. We talked live to all of you for about an hour. So head on over there, check that out, and we will talk to you there.